2021 is going to be a year that's going to be very interesting for the stock market, especially since we had such an insane monkey ride at the beginning of 2020 where the stock market crashed and lost around 20% of its value before recovering to highs we had never seen before. So in today's video, we're trying to provide you with some sense of information that you could possibly use to guide you on how and when which stocks you might want to sell. Based on the information from some of the world's leading hedge funds, we're going to be looking at just exactly what the world's richest and elites are selling in 2021 and in 2020. It's going to be an interesting video because these are things that they have to disclose. As you see, when you're someone that manages over $100 million worth of funds, you have to disclose this information via a 13F filing. So we're going to be looking at the public data showing us just exactly what the richest are selling. And maybe it might just influence your decision on what you choose to buy and what you choose to sell moving forward into 2021. Coming in at number 1 is Apple. Now, the thing is, Apple is actually a behemoth of a giant. Apple is the third most valuable company in the world, just ahead of Amazon. So Apple is one of those giants that you can't expect to come crashing down because I think at this point it's pretty much too big to fail. Literally everyone has an iPhone and Apple is simply sitting on far too much cash to be able to be hurt by the COVID-19 pandemic. However, if we look at some of the 13F filings, the filings that show us just exactly what billionaires are doing, we can see that one of the world's most notable billionaires has actually sold a decent amount of his Apple stock. Warren Buffett has actually sold some of his Apple stock. You see, on this article from Yahoo Finance, it states Warren Buffett sells some Apple stock, but these investors don't think he's done with the tech giant. On CNBC's Fast Money halftime report, investors discuss Warren Buffett's recent portfolio changes in Berkshire Hathaway. Berkshire sold about $36 million of Apple shares in the third quarter according to their most recent 13F filing. Buffett selling Apple is just portfolio management. The market has seen a large rotation out of tech as COVID-19 vaccine news ramps up. The sector benefited from the so-called stay-at-home restrictions, and I don't think Buffett has conviction on getting out of Apple. It's still one of his biggest holdings. I think if I remember correctly, Buffett holds a very large position of his company, Berkshire Hathaway, in Apple. A very decent amount, and that amount isn't really going to be going down. So the reason I think they actually sold this amount of Apple wasn't because Apple is headed on the out or Apple is a very bad stock pick. I'm pretty sure he just wanted to take some profit and invest it elsewhere into other emerging opportunities. However, it's going to be interesting to see exactly what happens to Apple stock in 2021. Coming in at number 2, we have Wayfair. Wayfair is one of those companies that has recently been growing and somehow benefiting from the stay-at-home pandemic orders. The billionaires that sold some of the Wayfair was the billionaire investor Ruane, Cunniff and Goldfarb. So if we look at this article, it shows us just exactly how many shares that they sold. They sold 633,438 shares, a decline of 21%. So it states that investment manager Ruane, Cunniff and Goldfarb sold out of several different stocks during the third quarter. Few of these sales generated significant proceeds. Its largest sale in terms of shares sold during the quarter was Wayfair, the online furniture household goods retailer that came alive during COVID-19. So they sold their investment, and I'm pretty sure that they still have a sizable position. It goes on to state that if you're long Wayfair, you don't need to worry. The stock remains their largest position with a weighting of 8.1% and a market value of $599 million. So once again, we're seeing billionaires sell their profits because perhaps I think they realize that the pandemic-induced stock market rally is probably reaching its top, and it's always good to take some profits and confirm those profits in. However, Wayfair is up 189%, so it's going to be interesting to see if it declines moving forward into 2021 or if it simply just continues going up. The next company we're going to be looking at is Zoom. Now, Zoom is one of those companies that were literally birthed out of the pandemic, making its founder a lot richer. a couple billions more richer. Now Zoom is currently trading at $100 billion market cap, but has currently declined a very decent amount since the peak on Thursday the 16th of October. Now the thing with Zoom is that nobody really knows what the future of Zoom is. You see, Zoom was birthed out of the pandemic, and Zoom is basically reactive onto how bad the pandemic is. The better the pandemic gets, the less likely Zoom shares are to rise. The worse the pandemic gets, much more likely Zoom is going to go up, and we've seen that the pandemic has somewhat declined. However, with a new strain in the UK that is possibly going to be spreading around the globe, considering the UK hasn't really introduced any stricter lockdowns, it seems that Zoom could be a long-term potential hold. However, if we look at Jim Simmons from Renaissance Technologies, the billionaire actually sold around 27%. They sold around 2 million shares, which was actually worth $23.5 billion. Although they did actually still hold Zoom with 5.25 million shares worth about $2.5 billion at the end of September, they actually did manage to sell a huge amount. So I think what they're doing there is simply just confirming profits, and as I've said before, the future is very uncertain. So it's almost certainly wise to lock in those profits while you can, because nobody knows if Zoom is going to come crashing down if a new type of vaccine is announced and everybody can go outside once again, because stocks like Zoom are very volatile to news. As you've seen before, when Zoom announced their earnings, the stock skyrocketed. When vaccine news was announced, the stock kind of plummeted. So this kind of fluctuation isn't good for hedge fund managers that are looking to have some financial stability for their clients. So it would be wise for many of them to sell a decent amount of Zoom, because going into 2021, which is somewhat even more uncertain than 2020, nobody wants their portfolio fluctuating by 20 to 30%, whether it's up or down. The next one that we're going to be looking at here is the conglomerate and retail giant Alibaba. Alibaba was sold by David Tepper from Appaloosa Management. He sold 1.1 million shares, and this was the largest Q3 share sale by Appaloosa Management. The hedge fund, co-founded by the billionaire David Tepper, who owns the NFL's Carolina Panthers, has actually sold a decent amount. So I don't know why they did this. I mean, it doesn't seem that there's any other reason other than to take profits. The stock actually did skyrocket this year, up 40%. However, looking into the future of Alibaba, you can see that there are many allegations against them into becoming a monopolistic company. As you can see by this article right here, it says China targets Alibaba with anti-monopoly investigation. Shares in the e-commerce company plummet, with financial spin-off Ant Group calling for supervisory talks with authorities. So Alibaba is right now at the center of investigations for anti-monopoly stuff, so it could be interesting, and this is probably part of the reason why many different people are considering pulling their money out. So doing your own research is always the best advice. On this channel, we do try to give a fair and balanced argument, but a lot of the time what tends to happen is the video is presented in one way or another. So we would recommend doing your own due diligence and having your own opinion when doing your own capital investments. You should know that you only should invest as much as you're willing to lose, as right now the stock market could be in a position where it's poised for a huge correction, meaning that the current portfolio value that you may have now could decrease significantly over 2021. If you're someone that needs that cash for your family, I would suggest providing yourself with a more suitable sort of investment, perhaps maybe investing in real estate or something less volatile than the tech stocks of 2020 and going on into 2021. So that's just our advice. If you want to take it, it would be great. If you don't, it's completely up to you. But this video was just going to show what the billionaires of the world are currently selling as we're going into 2021.